Hello and welcome to our daily market review and analysis. Thank you for joining me. Hopefully we will cover some interesting charts, although the market is currently still undecided in several ways. So we are going to be looking through the yen pairs today, but also along with that we will look at our usual other charts of interest. We'll commence with looking at the Dow Jones Industrial 30, and not a lot of action since last 2-3 days. It's been a fairly sideways market, and if you look at it on a 4 hour, you see, for example, that we've just basically moved sideways here. It may be that we are in a possible topping formation, i.e. in this last final leg up here of this current cycle. It appears that we've done minor wave 1 in this rising trend channel, minor wave 2, minor wave 3 possibly, and in terms of exactly where that ends, it's either small 1, small 2, possibly small 3, 4 and 5, or it might be small 1, small 2, and maybe this is small 3. But it looks like as a rising trend line from the bottom, almost appears like it is being currently challenged, and the price action, as you can see, is beginning to tear off. So my feeling is that we may well be completing this minor 5 wave in this last leg up. So in essence, we'll finish up with November low, 1 in parentheses, 2 in parentheses, 3 in parentheses here, 4, and then this one being the 5. So that would complete this particular cycle, and therefore we could very well expect some deeper retracement than we've had along the time when the market has been recovering from the low back in November. So we would expect a retracement, but not necessarily very deep. We've got several areas where potentially we could have a support. So if you look back, then on this daily chart, see this area here could be a potential support, because previously was resistance and then again it acted as a support. So we could come back to that kind of area there. So that would only be relatively a minor retracement. If we have a bit more deeper retracement, then we could probably come back all the way to this rising trendline channel, which, as you know, we've drawn from the low we had back in March 2009, where we drew this low connecting this next higher low, and that gave us the general uptrending a wider channel within which we then sort of remain within a fairly narrower range, but we could come back to retest that, although I think we are expecting only a relatively minor, maybe drop back to about 13,500 or so will probably about contain the current correction. But we will get some further indication of how far we are likely to come, and exactly which particular cycle we will be correcting. If you look at it on a slightly longer term, then on this daily, for example, we had this first one up which we called like a triple zigzag to call as a WX. Then again we've had a Y, so it's quite possible that WXY might have completed the whole cycle. So we could potentially either leave it like that and carry on counting, or call that WXY as a wave A. If this is wave B, then we are currently in a wave C, and in a wave C, just like over here we had a triple zigzag, so again we have a triple zigzag. So WXYXZ, so maybe that would be then triple zigzag. So we'd call that one a wave, a minor wave A, minor wave B, and then another leg up for double zigzag, as it were, over here. So we got WXYX, and in the same way with the triple zigzag, we call it wave A or a W. We'll get a Y or an X rather, and then another leg up. So I think there is quite a further prices to come, but we do expect a minor retracement, and that retracement could be almost ready to commence fairly soon. We might even commence earlier than we imagine. It may be perhaps even by Friday. I think Friday also is a pivotal, because tomorrow we have a non-farm, not non-farm payroll. Tomorrow we have unemployment claim data from US coming through, and then there are other release of fundamental data which would affect the equity market. And then if we look at the equity market on a 4-hourly chart here, we have a clear breakdown of this current thing. So if the market actually came down, that would confirm this divergence. At the moment, this only remained like a potential divergence and could fail, and we could get another thrust higher. So but Thursday I think is quite important. We will look at reasons why, and my feeling is that maybe on a Thursday we would probably top out, or certainly by Friday top out, if we don't do that earlier. We're looking at the oil index. Then on the oil here, we are currently still retracing this down leg, and it looks like we've almost reached the level where we could expect a minor A completion, and we should then get a small retracement and then another leg up to complete that ABC zigzag, and then a continued decline in the oil price. And only other thing to note is that recently we've been finding ourselves looking at the equity market and dollar index, and they normally should have a negative correlation, and a fairly high negative correlation at that. But apparently recently we've been finding dollar is going up, and we're also finding equities going up, and that's rather strange. And of course, whilst it's possible for that to happen for a short period of time, the normal relationship will recommence, whereby the equity market and the dollar will continue then to show a strong negative correlation. But at the moment they both seem to be moving in the same direction. So generally speaking, we are still looking for sideways to maybe up, but by Thursday, Friday, which is basically tomorrow and Friday, we also are expecting a potential top being formed and maybe a small degree of retracement to commence. Looking at the dollar index, longer term, you know what we've been doing. We've been following this particular chart pattern here, and we are in the very final end. You see, also look at the RSI on the daily. We've got a clear divergence from the RSI, but the price hasn't come down yet, so we need a confirmation of that. And again, it looks like that could happen certainly by Friday, if not before. Fridays and Mondays usually, as you know, I've often commented that just a general observation that we find many times, Fridays and Mondays often mark high and low of the week. So dollar index could very well establish its high for the week, and probably high for the cycle. And should that happen, then we would expect dollar to sell off, and that would probably spur the equity up for a little bit longer. Although recently they've been acting together, so you don't know whether dollar comes down and equity will come down with it. But I think there is something brewing, and we need a catalyst to actually confirm the top, both in the equity and in the dollar, fairly soon. But in this last leg up here, we're looking for 5-wave cycle up, and from yesterday's count, as you noted, that I have now settled on the possibility of this being one, and then that one being running flat to say wave 2, like I've indicated in this green here. And then we've got this as a wave 3, which is made up of wave 1, A, B and C again as running flat, wave 2, wave 3, wave 4 and wave 5 to give us completion of wave 3. Then we have a retracement for wave 4, and we are in a process of wave 5 being formed. And if I just drop you down to the hourly chart, then you see this one here. We may have wave 1, and then a sharp thrust as a wave 2, wave 2 and wave 3, and this here was a wave 4, and currently we're in wave 5. And then in that 5 wave, this last leg up here, it appears that this could be possibly 1, 2, 3, consolidating in 4, and we might have another one minor thrust to the upside. And that would probably complete the top formation for dollar index. And just excuse me a second. So we're looking for this final thrust up in order to complete this 5-wave sequence. The only thing against that we would keep in mind is that sometimes, although I'm not expecting this, but sometimes when we get wave 3 could actually extend, and in doing that we might actually find the sequence of wave 3 gets longer, and in which case I would be very puzzled. In fact, to some extent I'm already very puzzled. It's only now that I'm just trying to get a grips with the fact that this probably is now completing wave 5, but sometimes if that extends, then we might find this one is wave 1, this is wave 2, and then this might be wave 3. I don't think so, but it could be. However, the only other thing that we have to consider is we are currently in a rising trend channel. So if the price comes out of that channel some noticeably, so in other words, not just a small breach, or we get, if and on the next decline we probably will, because you can see even here now we are almost gravitating to the lower end of this rising trend channel, rather than a price is projecting to the higher side. From here we've been tailing off. So I think, quite honestly, that we may very well find that we have almost topped. The other possibility would be is that we may still continue grinding higher on the basis of this here. It will be unusual, but it's possible. So let's say if I change the color of that one to say blue, so what we might find is, for example, these trend channels continue running up like so, and from the top we have side from wave 4 we might get a larger 5 waves. So we get wave 1, wave 2, wave 3, a small retracement 4, and then 5. So in other words, we'll get like an ending diagonal. Okay, so what that would mean is that we would get like wave 1, wave 2, wave 3, this retracement back to 4, and then one more thrust up to complete 5. So that is possible. So that way we might still find that dollar index continue grinding higher until about Friday, when I think there is likely to be a change, and then in that case then this 5 would go over there. So although I'm expecting a top, but I think the top might not happen till Friday, and therefore we need to consider possibility of this rising wedge, which would stretch the price out a little bit longer in order for the Friday to arrive when the top is formed. Okay, now other than that, I mean, it's a right area in terms of fib retracements and overall count, divergences on the daily chart, and even on a weekly, I mean on a 4-hourly chart. As you can see here, we have started actually trajectory to the downside, and then over here we seem to be just resting on 50 every time. So next time round we could very well fail that level 50 and we could drop right below. So from that perspective, I think we are in the right area, except that we don't know exactly when. But in terms of general time element, I think Friday would be a good day when dollar tops out. um, and also I think there was an observation by WT Gann that uh, each time when the sun crosses the equator and we get the event called equinox, which happens approximately this time of March, give and take few days on either side, then that's another uh, time period when he often observed that the market made a trend change around those dates. So equinox in March and another equinox in October, those are general pivotal area when you often find give and take few days on either side. We often find market forms a top or a bottom, or certainly a trend change. So from that perspective, we could be in a general area. But there is another reason, and we'll come to that in a moment. So having considered the dollar index likely to top out later this week, we'll go over now onto yen pairs. And we'll look at the yen pairs now. So the first one is the US dollar yen, and you can see from the low where we started from here, or maybe this low, which is 13th of September, we've got a first leg up which we are calling wave 1, wave 2, and then after that we were in a wave 3. That wave 3 I think is nearly done, because we have this wave 1 in parenthesis, wave 2 in parenthesis, and then in this sharper rising trend channel, wave 3 in parenthesis, ABC down as a wave 4 in parenthesis, and now that we've gone into wave 5. And looking at the last wave 5, starting from here, is that we may have this as wave 1, wave 2, so it's probably some kind of a leading diagonal, wave 1, wave 2, and then the remainder is wave 3, so that could be 1, 2, 3, 4 and 5. So that gives us the wave 3. So we are currently retracing in wave 4, and we may have one more thrust up, and I think that also gives us an opportunity to reflect on the fact that we might get another thrust higher to line up with the dollar index topping, because the yen is part of a dollar index, and if the dollar index tops, then potentially it could also top against the yen. In this fifth leg, we are in this rising trend channel, so this one overnight and earlier tomorrow, we need this one to continue rising up. In terms of the fibs, we've almost reached the level where we would have reached. This is only going to complete wave 3, by the way. So once wave 3 is complete, we will then drop down for wave 4. So wave 1, wave 2, wave 3, wave 4, and then go back up for wave 5, which is when this 5-wave cycle will be over. Then we'll have a deeper retracement, and then finally another leg up higher. So as far as we are concerned, in this current cycle here, I think quite potentially is that this leading diagonal is 1, then we've got 1 and 2, and then up to here is 3, this is 4, so we should be expecting a final move up, and that will, as I say, tie in with the fact that the dollar index might top. So if that happens, then we've got a little bit of time for these yen pairs to press up against the dollar, or rather dollar continue to gain against the yen. And then similarly we look at the euro yen, and euro yen likewise have completed their 5-wave cycle, though that one is a little bit different in a sense that this one here starting off with wave 1, wave 2, then again parenthesis wave 1, parenthesis wave 2, parenthesis wave 3, parenthesis wave 4, and we're currently in a 5th wave, and that 5th wave could be failure wave. In other words, it might not reach the even high of wave 3. If you look at 4-hour chart, then again we have a possibility that this is the diagonal, leading diagonal, like so. For example, so we've got wave 1 and wave 2, then possibly this is 3, 4 and 5. So maybe this is all done, or if it's not done, then it may be that this is 1, this is 2, and then 1, 2, 3, 4, 5, so that becomes 3, this is 4, so this 2 will have another one more thrust up before that one completes. But in doing that, we might finish up with this as a double top. So in reality, we are getting close to yen pairs, all the yen pairs almost forming their intermediate top, and then having a retracement that is going to be larger than the retracement we've had along this way. And the largest retracement we had is this one here. So this one here is approximately 700-800 pips. So this next one will be at least that, or a little bit longer. So potentially if you were inclined to trade yen pairs, then whilst it would be classed as a higher risk in terms of shorting it against the main trend, but because the cycles have now complete, we will be shorting it at a potential top. And you have to remember that these pairs, when they move, they really do move, so you don't need to, or don't consider having a very large position, but you could possibly consider a small position on this last leg completing. So you drop down to 1 hour, and then on 1 hour you can see on the RSI, look, RSI deviated very sharply and is fallen below 50. So either we already have a top, or we will soon form a top. If you look at the RSI, then whilst it's in the trend channel, the overall price, you can see the RSI that is completely broken on a 4-hour chart. So my perception is that we've already completed. What we've got is we've got a truncated wave 5. So you could consider two things. You can say that if this one comes down, then there'll obviously be a retracement, and it's on that next retracement you short. And if this is the first wave down, we should get a reasonable retracement which will bring us back to 125.20, or maybe slightly deeper. Or if we haven't topped, then we, as I say, we've got one more thrust up, and in which case you'll be able to short it at a higher level, and that would be something like 126.50 area approximately, or maybe even 127 if you get that far. That would be the potential area for shorting, and in which case you could have a position which doesn't carry such a high risk, although we would always have to allow slightly wider stop loss on these pairs because they move a lot. They really do move a lot. I mean, this is a 4-hour chart, and you can see, for example, in hours like this one, 4-hour, and it's moved nearly 300 plus pips. It doesn't happen all the time, but it does move. See, this one here is 4-hour, and he's moved nearly 250 pips in 4-hour. So, you know, small position, but you could enter with maybe 200 or so pip initial stop loss as a precautionary measure, and then adjusting that fairly quickly to bring it to break even, and then after that you could possibly ride the retracement down, and we are looking for retest of this last low here as a minimum, and maybe even another little lower low. So, you know, either way we're looking for potentially somewhere in the region of good 700 pips. So if you're wondering about which particular currency to trade, then that would be a short, possibly lining up with some retracement in all yen pairs. So US dollar yen is one of them. And what you might do is you probably pick the weaker currency. So weaker currency would be something like Aussie yen, or we'll come to that chart in a moment. Aussie yen or possibly New Zealand yen will be the weaker of the lot. So maybe you could use them short and it would work well. But euro yen again, either a bit more movement to the upside or short, and potentially just a way of finding to get in with a small position, and then if need be you'll be able to add to it if you correct, bring it to break even and lock the profit in, and then add on a subsequent pullback. So CAD yen also is almost identical looking chart. That too has finished wave 3 and the retrace for wave 4, and is now trying to finish this wave 5 here. And like the euro, it also has 1, 2, possibly 3, 4 and 5. So maybe this one during the night or early tomorrow we might do a little pullback, and then maybe another thrust up, and these probably will come to fruition by Friday, I think. And I'll come to that in a moment why Friday. I keep talking about Friday, but most of these pairs will probably line up with market trend change for at least for an intermediate period. So I was CAD yen, and then look at the pound yen. Now the pound yen is probably the strangest looking pair, because pound has been very, very weak, and that also has finished this wave 3, I think, and it was probably one of the first ones that finished wave 3. So you've got wave 1, wave 2, and then minor 1 in parentheses, 2 in parentheses, 3 in parentheses, 4 in parentheses, and then 5 in parentheses. So that's wave 3 finished. Then we've started completing coming down, and maybe we have finished wave 4 and we've also gone back up with a truncated wave 5, or on this one we may be doing like A, B and C. But if I drop down to 1 hour chart, or 4 hour chart rather, so in a 4 hour chart, after this top has been made, you can see it's come down A, B, C. So we could call that one zigzag wave A, B, C back as a wave B, and then this I think is a wave C, which meaning that this is 1, 2, and then 1, call it 1, 2, and then you got 1, 2, 3, 4 and 5 to give us a wave 3, a small retracement 4, and then finally 5. So I think that was ABC down, and therefore that one could legitimately be called wave 4, and then this is wave 5. So if this is wave 5, then you can see on here we've got a leading diagonal just like other pairs. There's 1, 2, this is 3, ABC retracement 4, and maybe we are now trying to form that last leg up, but the last leg is not going to go all the way to the top, I don't think. So it will again finish up with a truncated wave, and in terms of the structure, we may very well have a potential resistance in this area. So that could be the high, and that if that happened, then that could be the time to consider shorting pound yen. And the other thing to do is to draw this trend channel or trend line from the bottom, and if we stay above that, then of course it's going up, and then if it gets nearer to 145.50, 145.60, that could be a good area for possibly considering a short. Initially your stop has to be this one here, which is about 250 pip away, but as I say, these pairs when they move, they really do move. So small position would do you wonders. You'll be able to, for example, from this area, we'll be looking for retracement something like this. This is almost going to be like 700-800, almost 1,000 pip potential for it to come, and you'll see it also looks like a head and shoulder pattern. So head and shoulder pattern meaning that if it breaks below the neckline, you could be looking for a target much lower down, so actually this kind of a trade will actually, once if you do get in with a small position, you'll be able to write down, and maybe 1,000 pip wouldn't be out of order for retracement on currencies like the pound and some of the other yen pairs, or Aussie yen and New Zealand yen, which I think are going to be the weakest currency. So they would probably depreciate against yen even more so. So let's have a look at those charts. Swiss yen is exactly the same as the pound yen. I mean euro yen. Again, it is trying to finish that fifth wave up, and that fifth wave might turn out to be a truncated wave, not reaching the even a high of wave 3 and coming down. Swiss yen doesn't have the same structure like the pound yen, showing a clear head and shoulder potential pattern, but this one would be slanting like this, in which case you can say slanted head and shoulder with a left shoulder head and a right shoulder currently in formation. Come to Aussie yen. So Aussie yen, we say that Aussie is going to be a weaker currency, and therefore it will probably have a lot more to lose. And currently it has made a higher high, as you can see. And again, same thing is that we've got wave 1, wave 2, wave 3, wave 4, and we are trying to finish up wave 5. And the wave 5, I think, is almost complete, because you can see here on the 4-hour chart we've got a wave 1 up to here, say wave 1, wave 2, and then we go to wave 3, which is 1, 2, 3, 4 and 5. So wave 3 finished, wave 4, and we are now doing the final wave 5. And in the final wave 5 we might get a small pullback and one little bit more to the upside, and it's done the job. And then we'll be looking for this 5 wave complete. We'll be coming right down. So if this is the 5 wave complete, we'll be retracing the entire move. So starting from here, okay. And if I just change the colors of that one and make that one something different, you can see, well, it's not that different. What color shall we use? Okay, so if this is wave 5 all the way there, and we do something like a 38% retracement even, then we are looking to come down to, this is 23%, and that's 600 something pips. And if you're looking for 38%, then we are looking for almost like 1,000 pip. Okay, because this one is completed a 5 wave cycle up, so we're going to be retracing that, and I would not be surprised if this one drops down to this area where previously there was resistance, have been broken through. Now we come back and we find that that could be a potential support. So from that perspective, Aussie yen looks good. It's right at the high, and perhaps if that one confirms that it turns, so you'll have to then look at, see, look, we've had this divergence, then we're going now for 5, and even that one we've got potential divergence with wave 3. So I think that one is much good looking a potential short. We just need to time it well. So if you look at it on our chart or 4-hour chart, we should be able to put another trend line on here. Like so on this hourly chart, and then as long as we stay above, we're okay. But if the moment we begin to weaken and start coming down, then we could consider shorting that. And in this final stage up, it's got 1, 2, currently going over 3, get a small return 4, and then final 5, and that is likely to complete the cycle. So this one I think is better shorting, simply because while some of the other currencies also move very, very much, Aussie is currently weak. So then I think in terms of strength, if everything will be correcting against yen, it's been rising strongly against yen, so for the time being it will be correcting. That means the yen for a short term will become strong currency, even stronger than euro, which I think relatively speaking is quite strong. So yen will become, for a short term, intermediate term, will become quite a strong currency. So from that perspective, it's best to find a weak one, and the weak one will be either New Zealand or Aussie yen. Okay, and out of them at the moment, right this moment in time, the New Zealand is the weakest one after the two. Okay, so that potential short New Zealand yen, confirming that it looks like it has already topped. The 5-wave pattern we're looking for, I think, is almost complete. So you go wave 1, wave 2, then you go to parenthesis 1, parenthesis 2, parenthesis 3, parenthesis 4, and parenthesis 5. So that completes the wave 3. And then if you look at the wave, if you look at the final leg, then you can see even the final leg appears is complete. 1, 2, 3, 4, and 5, and we've started coming down. And also you may have noticed that the New Zealand today, the Reserve Bank of New Zealand representative made a comment about possibility of them cutting interest rate. I think it's about 2.5% at the moment in New Zealand. So if they cut that in any shape or form, I think the market would come down fairly strongly. And I've already hinted earlier that the New Zealand is likely to be, New Zealand and Aussie are likely to be weak. So for example, this one could correct quite easily and come down to something like this area here. New Zealand coming down to here, maybe even deeper, back to this area where previously it had a resistance, could come to there somewhere, and in which case we are looking at almost like 700-800, similar sort of pips in terms of pips, but really the pip value will be a little bit different. So that also could be a potential short, and it's almost done. It may not have much left. See, may not have much left. 1, 2, 3, 4, and 5, and we've started coming down, and this could be quite strong already. So if that is the case, then you'll have to wait for a small retracement to enter with a stop just above. So ideally, if you can enter somewhere around 78, 90 area, that would be ideal, or even better would be 79. If you can enter somewhere around 79, okay, and this minor trend channel is gone, and even if you do the parallel channel over here, then that probably is gone as well. So I think this one with the Aussie have completed this cycle already. Okay, so those are the yen, and possibility that they're in a very close proximity of putting a top in, and they could be looking for reversing fairly soon. Okay, so having said that, we'll go over a couple of other charts that we want to have a look at. I'll firstly look at the pound, because I think the trade that we've been stroking is actually now materializing. So the euro pound, we were suggesting that is finishing this 5-wave cycle up and is a potential short, and I think the short has been triggered today. You can and is forming this ugly looking head and shoulder or a crown kind of a shape. Ugly looking, really ugly looking. More so because of this one here, otherwise you get a slanted head and shoulder. But if you look at that on a 4-hour chart, you can see that we've already come down, and it may well be that this is like a truncated wave 5. You would measure it by saying this is 1. So this would have been ABC down wave 4, then you got 1, 2, 3, 4, and 5 done, and we are now coming in a downward trend, and will be declining quite a bit. Okay, so that means the pound will be relatively strong, and it will be strong because it has been oversold, and it will be bouncing back fairly strongly. So even against the euro, it will be catching up. Okay, so in that particular case, if you're looking to pair strong with a weak, then you might find that maybe you want to be long the pound against something, so like shorting the euro, or maybe longing the pound against one of the other currency pairs. Well, let's have a quick look at that. Pound Swissy, also pound Swissy will be looking like continuing to retrace to the upside. So we've done wave A, wave B, and we'll be going up there to complete wave C. But this is what I was going to show you. You see, this is the daily chart. If you look at a weekly chart, then from this low we made a 5-wave up, we've come back into 78%, 78% retracement. Okay, so that's first thing. Second thing is, if you compare this low and the current low, then we still have divergence on the weekly. Okay, so that's significant. It's taken us a long time and it's tried our patience, but having said that, you can see we've got a divergence on the weekly and we've got this coiling of RSI. If you drop down to daily, again we still have divergence, but on a daily you can see we have a very clear falling wedge pattern, and within that falling wedge pattern, if you start from here, then we got 5 wave down to wave 1, retracement wave 2, wave 3, wave 4 and wave 5, and even in the 5th wave, if we need a 5 wave, then we go 1, 2, 3. We're currently retracing 4 and we should be heading down 5. So let me take that out. So something like this is what we're looking for. One more small drive effectively is what we are looking for. One more small drive, which means that we should really find bottom or retesting low of today, or maybe making another small low. So around about 150, 180. So if I call this one 152 as a round figure, is a potential bottom, and we should be able to then go long on that. Now if you look at it on a longer term, then from there, if you go long at that level, then from there you keep your stop just below here. So initially that's like about 400 pips stop initially, but the upside is massive from here. Even if you just get to the top of the range here, that's almost 1200 pip, so that's 3 times the pip. And then you could get one of these big runner one that we are now looking for. So that means the Canadian is going to be weak against the pound, and potentially it's a good strong trade to start off with, and it's a falling wedge more importantly, because the falling wedge after already a decline is a sign that it is an ending diagonal. It's an ending of the trend, so we should be looking to go long. So I think if you have never traded this one, you start with very small. I would only consider like maybe 1 or 2 or 3 micro, no more than that. Okay, because if you're looking for 300 pip, I mean, I'm just making a round sort of general calculation saying each pip to $1, but if you actually work out a pip value, it will be different. But even if it is a straightforward pip, then that means being 1 mini lot, initially you'll be risking $200, $250 initially, but soon as you start working out, you get a couple of $100 in a profit, then you be, or even $100 in profit, you'll be able to bring it to break even. I would do that, and then as it progresses up, then you'll be able to lock in a little bit of profit, and then after that there's no more risk. So when these currencies run, they run quite fast. I mean, this is very overlapping, and so it's because it's corrective. If it gets an impulsive leg, it could move very quickly, like over here. It could move very quickly. So potentially is good. So if you had like a 1 micro lot, or so for every micro lot, 200 meaning about $20. Okay, so you could probably have 3 micro lots, so you'd be risking like about $100 or so, and for a modest account, that would be probably no more than about 1% of the value. But then if you get a like 1300 pip run, certainly it would start reflecting, and then you'll be able to add some as you progress on this. And if it works out, we've been outlining this as a potential long trade for us, long swing trade, where it breaks out of this range. It won't go that through in a one go, but once it breaks out of that range, we could be heading for quite a a distance to the upside. So potentially a good trade, but if you can get into it over 152, I think that would be excellent. But the pound is certainly going to come into its own, I think, fairly soon. And in this particular case, it's an ending, so we're expecting it to go back to the top of the horizontal congestion zone. Look at the New Zealand, and New Zealand also formed a new bottom, new low, but if you look at the RSI, is still suggesting on a weekly chart a strong divergence. You've got a daily, and again you still got a divergence building on a larger swings, and even within this one here. Okay, if you put a trend line on the RSI, you can see we've already broken through the trend line on RSI on the daily. In the actual chart, we are still currently down, but we put a double bottom, and I think that this move up here is wave 1. We previously counted that as a wave 1. This one here is a wave 1. You got 1, 2, 3, 4 and 5 as a wave 1, and all of this very agonizing and time consuming and very confusing, but is basically a wave 2. So it might have been that this for example would have been something like a wave 1, so wave A, B and C, X, A, B and C. So it's like a double zigzag, and we are now starting off. So in this one we've got probably what looks like to me as, you know, this kind of slightly expanding leading diagonals. 1, 2, 3, 4 and 5 leading diagonal. A, B, C down is wave 2, and this strong shot up there is wave 3. So we'll get a wave 4 retracement and small and wave 5. So looking at it on hourly, wave 4 might be already done, or we might have a little bit more down leg, and then it will go up a little bit. So that will complete a 5 wave, and then basically we'll do a retracement. So that's when you will consider going long if you're looking to long this one. Once we have that high, you'll be able to put a Fibonacci on there, for example, and you'll be looking for entry around 38 to 50% retracement, where we had this minor trend line coming, and we'll be coming back to retest that horizontally. We'll be coming back to this previous high here, potentially now becoming a support, previously resistance, and look to get long around 161, 181.50 area, or 182 is approximate area where we could consider going long on this one. And again, once we break out of this, then the long term, our immediate resistance will be this brown line, which was the last time major bottom. So we'll come into there, bump into that, maybe come back down partly, and then go through. Or it might just, like here, it just fell through, so we might just break through. And you can see also it will give you this W looking pattern, which is, you know, very typical, almost typical, with a double bottom sort of looking Elliott wave 1 and 2, and we are in wave 3. So this wave 3 should be quite strong. Upside, we're looking for minimum that kind of thing here, around about 2. So, you know, lot of distance, but you'll have to be a bit patient with these, and if the position size is such that you are not going to be swamped by normal volatility on these pairs really do move, so you have to be careful with them with relatively small position, but they could give you quite an interesting long-term swing trades, which might last you for several days, maybe a few weeks, maybe, you know, by the time you get to this sort of level here. On a daily chart, for example, for this one to decline, you know, up to here, it's taken like 46 days. So it's like about near enough like 2 months, you know, in terms of trading days. So, you know, you'll be in this for quite a while, and hopefully we should be able to make some good money on these. But using a small position to enter, that's a key. Can't really stress that enough. And then if you look at the pound Aussie is exactly like pound New Zealand, but see, look, a clean, very clean falling wedge. That's an ending diagonal. You've got A, B, C, D and E, almost finishing. And again, divergence is at several degree on this one, and basically this is the kind of slingshot we are looking at. So it's a question of entering in there safe, the small money at risk, and being there. See, at the moment it is still coming down on this 4-hour chart, is currently still pointing down. So potentially, if you look at it in hourly, I think what we've got is 1 2 3 4 and 5, wave 1 up, ABC retracements wave 2. So this wave 2 should not go beyond the low here. Okay, so we've already got a 4 hour a new hour bar. If you went down to 30 minutes, 15 minutes, okay, so what you'll be looking to do here, let me just take this thing away. Okay, what you're looking to do there is you just want this one finishing here. Okay, so last low was this big candle coming down low, and then subsequently we've got a small candle. So on this 15-minute chart, this is the current high. So if you begin to see some positive price action on 15 minutes or certainly an hour, okay, so once you see where this hour bar closes, and then next bar opening, if it retraces a bit down, then it'll be good because you can enter with a relatively short, small, tight, a couple of hundred pips stop loss. But if you get a follow through, then you want the closing of the bar, and then the next bar open is what you take with a few pips above that. So wherever the high is of this hourly bar, maybe you might enter like 10-15 pips above that. So if the price takes that one out, then you enter and your stop will be below the low of that hourly bar. Okay, but potentially that is also looking for a long entry, and it's a clear falling wedge. So you can't really go wrong with this falling wedge, because falling wedge is a synonymous with it comes in after the substantial fall. So it's an ending diagonal, which means basically the trend is ending there. Okay, we will not come back to that low. Even if we make a 5-wave swing to the upside, we'll drop down, we'll only retrace part of it, and then we'll be able to add start going up again. So you may even enter with something, and then on the basis that you take that off when you get to a level like this low here. So we'll come back there, find some degree of resistance, you can take it off, wait for it to retrace, and then re-enter. Okay, and if you didn't or don't want to re-enter, then you'll have to wait for this one to come all the way to wherever, then do a normal retracement like 50%, 38%, 50%, 60%, and if it's the right at the beginning, then more likely it will be 50% or 61.8%, and that's when you will enter long. But at the moment, it's a good risk reward, because even if it simply comes to retest this broken support, it's 340 or so pips. So if you're risking a couple of hundred pips initially and then bringing to break even very quickly, then you'll be able to possibly harness a good 400 pips potentially to get you going, then wait for retracement and then enter long for a proper long trade to the upside. So pound is really shaping up. Likewise on a euro, just a couple of currencies, I won't go through the whole euro CAD is still looking interesting, and this will depend on the euro bottoming out, and I think the euro will bottom out on Friday, and therefore most of this trade that we are looking at will probably materialize on a Friday against euro and yen. Okay, Canada is still long, and then we look at euro Aussie. It's come down below this rising trend lines, and also dropped below the 200 period moving average, 100 period moving average. But you see over here it overshot the 100 period moving average, also there and there, and we've probably done the same, but this time around we've done a bit more than that. So it is a little worrying, but I think if you look at it horizontally, then previously that was an area where resistance will come back into that area, back into that zone, and in terms of the RSI, potentially on RSI we are still in an uptrend, but we're coming to potential support very quickly or soon. And then if you look at this price move up, quite strong and very impulsive, and in comparison this is coming down in a very agonizing and laboriously slow and overlapping. So that suggests to me that is what you call a retracement, whereas this is an impulsive. So this is not a new downtrend, it's still retracing. but is retracing deeper than we originally anticipated. And then if you look at it in a 4 hour, then you can just make out this here is a potential triangle. Okay, this here is a potential triangle. What the triangle tells us is that there's going to be one final leg down. And then if you look at the triangle earlier, we've got a wave A, B, C up there is a flat wave B, and then we got A, B and C. Okay, so we've got basically double zigzag to this triangle. Then after the triangle we should expect A, B and C, which is what we got. And then today's 4 hour bar is selling off very heavily, and that's probably because euro is weak, nothing more than that. But if the euro stops out, bottoms out, then we should be looking for potential bottom in here. And if you look at it on a retracement basis, then we've retraced 78% of that first leg. So if you put 88%, so we've not quite reached the 88%, but it's going to come there. And then basically what we got is we got this minor trend line is already broken, so it's of no real value there for the time being. But horizontally, I think that's the only main thing, is that we've got Fibonacci coming in, and is broadly speaking an area around here where we should expect a support coming in that area. You see that area here, support coming in there. And then previously we were calling this a potential cup and handle pattern, but now if you get this one here, then you will agree with me what you can call this. You can agree with me that it will be a very strong, ignoring this bit here, a very strong head, left shoulder, right shoulder is broken up and is come back to test it, as it were. Right, this might appear to some that maybe this is the false break, but it's for come back. And if you look at it daily, is within the confine of this 100 period moving average coming in, and it will be going up. It will be interesting if I just put in there 200 period moving average. See the 200 period moving average just coming in underneath that as well. So it's quite interesting. 100 period is on the top, 200 period in the bottom, and 200 period coming in now to contain the price. And then the price will be supported by 200 potentially, and it will be like cradle between 100 and 200, and we'll be looking for that definitely to move out to the upside. So I think this will still come up, and this week possibly is the week, because the euro is likely to bottom out this week, and it could be very interesting. It's a question of finding a level where you can enter, and initially you have to enter with the view that you have to allow enough stop. So on a daily basis, I'd say that if you get this price dropping to something like 125, it's already there, but if it drops below to say 124.50 area, then I think it's excellent, because that will be like a 200 period moving average coming in there as well, plus the Fibonacci 88% retracement of this leg up coming in. And then basically what you do is you have your stop maybe below this low here, so that will be like a 100 pip possibility. Okay, 100 pip possibility, 100, or even below this one to be really safe. But that's rather too long. But I think this 100 or this next one here is approximately 180 pip. So anything like that, and initially the idea is to catch a small position at the beginning of the wave, because that will take out the worry and the risk, and you'll enter at a relatively good level, and then as it climbs up, you'll be able to then gradually bring you to break even and start adding. So before it gets too far, you'll be able to keep adding things without taking extra risk, and build up a small position even on a small account, starting off with micro lots, 1, 2 or 3 micro lots for each slice, and you'll soon finish up with a 1 mini lot, for example, but you haven't put such a huge risk at the upfront. Okay, so that's a Euro Aussie, and I think that's all I'm going to look at. Tomorrow we'll be going through Canadian pairs, so we'll look at some of the Canadians and other things. But let me just go back to this two things. This is the pound. We've been talking about pound. Now, in this pound, yesterday I pointed out that if you look at this rise here, this one is wave A, B, and then I think we've had a wave A in bracket, and we are currently retracing wave B in bracket. So if we put Fibonacci on that one, then currently we have come up to 78.6% retracement. Also, if you take this leg, then we have come into 61.8% because they both Fibonacci come in at the same level. So that's one interesting fact. We also have this trend line that I showed you, and we put it over this high, spike high here. We come into that range there. We have also on the daily a clear divergence developing. Okay, the price has actually started curving on the RSI, so any further price action to the upside will cause this minor trend line to break to the upside. And then the other thing is we have several other Fibonacci confluence in that area. But more importantly, what I'm going to show you is that from here, if you measure 20 days, okay, 27 days rather, 27 days will bring you to this high. So from high to high is 27 days, and then from that high to this potential low is 27 days, and that 27 days means it's going to be 17th of March. So 17th of March I think falls on the weekend. So most likely either we'll get a low in the pound on a Friday, or over the weekend when the market opens we might open with a gap down, and then it will start running up. So that's one reason why I think on a Friday we should see dollar index topping out and the pound bottoming out. Okay, now looking at the euro. On the euro, previously I tried to show you some degree of symmetry, and it looked like I was jumping about and maybe things weren't particularly very coherent. But see, from here to this low it took 86 days. Okay, so in the same way, if I measure from here to 86 days, that brings me where this vertical line is, and you can see it's 15th, so that comes to be Friday. So that's another reason why euro is likely to bottom out on a Friday, if there's a time symmetry there, right? And also it might come into a level which will be a little bit lower down. It might come into something like 28.80 or even 28.50, and then if you put a whole Fibonacci of this entire rise, 50% comes in there. Previously when we had a retracement for this one, it was 50%, and then over here if you do Fibonacci on this leg here, then we had 50% retracement. This one was 50% retracement. So 50% retracement on this leg, it was 50%. On this leg, it was 50%. So 50% has been very strong, and it's quite possible that this 50% will actually come in. So really speaking, a low for a long entry, if you want to trade euro Aussie or euro dollar to the upside, then look for 50% retracement of this entire rise from July to this February high, and effectively we are looking at is 128.80 is where we are looking at, and it will be by Friday because it will be 86 bars, low to low 86 bars, low to low 86 bars. Okay, now the other thing is that if you look at the total bars up to here, then from the high to there it will be 30 bars altogether. So that looks approximately right, because from here to there was only 20, and entire drop was 42 bars. But if you look at it from there to here is 27. So 30 bars would be full, and 30 bars, see, if you this look at this here, right from the bottom to the top, it is approximately 42, sorry, it's approximately, well, let me measure it, let me be sure, okay, from there to there is 142. So 142, and this will be like 30, so that's like almost like just over a quarter, okay. And see, this one is 45 bars, so this swing took 43 bars rather, this one took 43 bars, and that one is a 30. So you'll see the quarter to three-quarter relationship. Same with this one, 42, and that one is 30. So in terms of a time, that's like a three-quarter. But more importantly is 86 bars, 86 bars, retracement to fib level, lining up, and also the same date we are looking for is a potential bottom in the pound also. So that's another reason why I think Friday could be quite important, quite pivotal day, with the dollar topping out, and then euro and pound bottoming out, and then we've got effectively an uptrend. And in terms of the uptrend, you know very well what I was showing you over here is that we will have this looking like a W, X, Y, X, Z, and that's following this red one, or it might be A, B, C, X, another A, B, C to follow this brown one. Okay, I've got something else here, I think. No, it's the same. It's basically same. It's just saying that from the low to low is 86 bars and 86 bars coming into there. And there are several pardon me, there are several trend lines coming into corner there. There's a lot of energy in that region, and I think once it actually changes, then price is going to be explosive. And theoretically there is a possible that it could also break to the downside. That is a possibility. I don't think that is very likely, because if you look at the dollar index, it has retraced almost 88% of its decline from July high to September low. And in comparison, you can see this euro has gone up there and it's only come back and is still at 50, and look at the way it is coming down in comparison to going up. Comparison to going up is a quite impulsive up thrust. This one is I know we've got some bars quite heavy selling, but it's very choppy, very overlapping, and it's really it's agony. It's agony. And then since here we've basically gone nowhere. This is on a daily chart, and on a daily chart from about here to today is nearly 2 weeks, nearly, not quite, but it will be 2 weeks, the end of this week, 2 weeks from here, and he's not gone anywhere. So I think that is forging a bottom. Okay, and I think we're going to start looking like curving up to the other side. We've got divergences, both on the daily potentially and also on the 4 hourly. So everything I think seems to be lining up, and chances are that this would then start hooking to the upside, and same with the pound will be hooking to the upside. So I'll leave it there. I think I've covered enough. Tomorrow we'll be going through Canadian pairs, and we'll be looking at some of these pairs again to make sure that we've got some updated analysis on, and potentially a trade if it lines up, then a long entry to be considered. So once again, thank you. Hopefully you'll find this very useful and educational, and more importantly useful in you planning your own trades, and look forward to you joining me again tomorrow. In the meantime, have a wonderful trading, and any questions or comments, as usual, do please let me know.